report to the cloud. So today I have the privilege of having Anne-Marie Baiynd looking at TradeWave with me. So thank you, Anne-Marie, for coming.
It's my pleasure. I
Joining.
love TradeWave. I'm excited to ask you questions because every time I go in, I find a new feature that's amazing.
Yeah, the features it's getting really featureful. So,
Yeah.
all right, I'm going to share my screen and we can take a look. Okay, here we are. Today's March 10th, 2026. And this is the current screen. Right on the left, what I'm looking at is the opportunity table. And by default, it shows the last 10 years. And that means that it's detected all of the patterns based on last 10 consecutive years with at least 90% success rate. I can also switch it to 100%. We got 111 long opportunities and 4 short ones for today
Interesting.
based on last 10 years.
And the whole time is a default of 30 days, or it has an infinite number of days. It just shows all of them.
It shows them all, and you can see it
Gotcha.
right under the dates, like 147, 187, 146, and so on. It
Interesting.
goes all the way down. But if
Okay.
we want a certain um, day range, we can actually enter it here.
Okay.
I already had 10 to 60. Let's say we want to do shorter term trading. And here it is. We end up with 10 opportunities that are between 10 and 60 days for today based on last 10 consecutive years. But one of the cool features, which actually makes a lot of sense this year because it's a midterm election year, a lot of people might have heard that midterm election years are usually really ugly. They are not great, especially in the summers.
Hmm.
And one of the features that we have, instead of looking at the last 10 years, we can find all of the patterns that were detected based on the last midterm election years, which in TradeWave world, it's called PE plus 2. That means presidential election plus 2 years. So I'm just going to click that. You see a different list. And this is 10 to 60 days right now. I can also get rid of this, and it's still 4, which are
Interesting.
shorter term. You can also look at the 9 out of 10 years. So,
Very nice. So I'm going to interrupt you for a second because statistically, a lot of times, traders will look at something like this, and let's go to the 10 out of 10 list, the very small one, if you wouldn't mind. So as as a statistician, a lot of times when traders look at this sort of thing and they see something that says 10 out of 10, they automatically assume that there's absolutely no way that they can lose. And so, talk about statistically speaking, obviously, we have 10 out of 10 day, 10 out of 10 in terms of the gross base, but that just moves over the 10 years. If it ends up being 20 years, we have maybe a different number. But the one thing I like to remind folks of is there's never a sure bet in the market. There's only strong levels of probabilities, and which is the reason that I love TradeWave. So let's pick one of these and show us how to parse through what each of the numbers mean in the table, and then what we can look at in the bar chart and the price chart.
sure. So right now we have 10 years
Mm-hmm.
and P plus 2 is selected, which means it's the last 10 midterm election years, which is about 40 years of data.
Mm,
So let's do
nice.
ConocoPhillips, which is the top
Okay.
one. So right now,
Well, that's nice. No
it,
drawdown at all.
yeah. Well, the drawdown
Oh,
is not
sorry,
on.
I don't have it there. Yeah. Okay, I see that.
Oh, there's drawdowns. There's
Mm-hmm.
always
But
drawdowns.
all green. Yeah.
It just looks nicer without
Yeah,
drawdowns, although
right.
it does have drawdowns.
Mm-hmm.
So what are we looking at? We're looking at, first of all, the date range means it's today, March 10th, 4 days long. That would be April 2nd. If you would have bought it on March 10th and sold it on close of April 2nd, this would have been your return in the last 10 midterm election years. This is what the bar chart's showing you. And as you can see, the bars are 4 years apart because these are
Mm-hmm.
midterm election years. They're not consecutive. And on the bottom, we're seeing the current price chart up to here. And then here's a projection for the next 6 months, I think. It's the next 60 days. And what is this projection? This projection is basically the average movement of ConocoPhillips after today's date based on the last 10 midterm election years. This is what it's done. Is it
Interesting.
going to do it this year again? I have no idea, but look, it's done it since 1986 on midterm election years. Is it going to do it this year again? Possibly, very likely, but it's not a guarantee. It's done it for 40 years. It might do it again, or it's likely to do it again. You can also look at the trend chart, which is exactly what the projection is. The trend chart is basically taking these movement of the stock during these 10 years for the entire year and
And the
doing it
shaded part would be how long we would hold the trade, correct?
exactly. This would be
Okay.
the beginning of the date until the end date,
Okay.
which is 24 days long.
Mm-hmm.
And you can always see it up here on this pull down. You can always change it too.
Mm-hmm.
So look at this. If you would have increased it, or maybe just, I'll just drag it, same idea.
Mm-hmm.
If I just drag it, you see a different bar chart. So if you would
Mm-hmm.
have held it until 17th of April, you would have lost in 1990 and 2002.
Interesting. So what does best waves mean up there at the top of this bar, of this formation?
Great
Yeah.
question. So right now we're looking at only waves based on March 10th.
Mm-hmm.
But maybe there are other times of the year ConocoPhillips does well. The best waves are the list of other times of the year that ConocoPhillips does well.
Wow.
Look at this one. Here's another one, 127. That's a different time, which is actually kind of
Interesting.
overlapping right now.
Mm-hmm.
And as you can see,
Interesting.
because this is from starting from 127, which is at least over a month away, 2026 is already showing a movement, 18% and additional 5% MFE.
Interesting. Okay.
And as you can see, that's this movement right here.
Mm-hmm. Yeah. Very interesting.
And of course, you can look at statistics and all of the information here. One of the things I personally really like is this S&P 500 buy and hold. This S&P 500 buy and hold means if you would have bought S&P 500 at the beginning of midterm election years and sold it at the end of midterm election years, in the last 10 midterm election years, you would have had a cumulative return of minus 8%.
Interesting.
But if you would have just bought ConocoPhillips during this period, 127 to 417, you would have had a cumulative return of 200%. So ConocoPhillips on midterm election years is a much better deal than S&P 500. Also, as you can see, here are all the earnings,
Mm-hmm.
and you can
Oh,
actually
nice. Very nice.
take a look at how the stock performed during these earnings and then projecting the next earning, which is May 7th
Mm-hmm.
for this year. Well, this is the basis of it. And again, you click on MAE and you see the drawdown during this period.
Mm-hmm.
And the date range is written right up there, 127
So
and 47.
if we are in the middle of, let's say today's date, we put something in and we see ConocoPhillips, but we notice that really the trend began in January. The big trend began in January. So we've missed a part of it. This system takes an account for that. And really, all we're looking at is from today. If we're taking a look at it, we still have that 10 out of 10
Exactly.
probability event. Okay,
Right.
great.
That's
Great.
your historical probability based on what's
Okay.
happened in the past. It's not a future probability. So um, it's just assessment as you found a repeating pattern. Now you have to assess that if this repeating pattern is going to repeat again. Although it's done it for 40 years, it's always possible it's not going to do it this year.
Okay. So let me ask a question about the little table on the left-hand side. You've got SR, you've got TWA, you've got TL. Um, Talk to me about the best decisioning around looking at the small list and how would I pick the best of the best here?
Oh, I've always have right now this TradeWave average. I've added TradeWave average to the list right now.
Mm-hmm.
And TradeWave average means so the dark green part is your gain if you bought it on 127 and you sold it on 417. That's the dark green part.
Okay.
Light green part is what I call MFE or maximum favorable excursion. It's how far did it go up? Like I can click any of these historical bars and see it that for that year. Look at it.
Oh,
That means you would have bought it right here. It went all the way up to there
uh-huh.
and came down and still closed for a gain.
Mm-hmm.
But that extra from high to the close is the
Fantastic.
light green part.
Gotcha. I did not realize I could click on the bar and get the bar chart underneath. See, every time I come in here, something new.
Then you can always
Absolutely.
click on current
Okay.
and get back to today.
Wait, which one is current? Oh, that little
This
bar, that little tab right there. Okay, got it.
right.
Got it.
Oh, I just clicked on the old one. And you can look at it for the rest of them too. And if you want more opportunities, click on 9 out of 10.
Mm-hmm.
You're going to get a larger
A
list.
lot more. Yeah,
A
that I
lot
can
more.
rank in terms of the number of days I want to hold or what
Exactly.
my trade wave average is. And so I'm looking for a good average. SR is the Sharpe ratio, right? And so I'm looking for a good trade wave average, and then TL trend. That's
Long,
sort of a trend long, but that's a strength level, right? Is
right.
that measured? Yeah. So,
Trend long is based on current technical analysis measures.
okay. All right.
So this is not historical. This is based on last 2 weeks.
Okay. Oh, okay. I got
When
it.
when trend long is high, like right now, it's between 0 and 100. When it's 80 or 79, that means ConocoPhillips has been going up lately or the last 2 weeks. It's somewhat of an uptrend. And this
Okay.
red arrow
But we're
means,
on Apache. So what you really mean Apache, not ConocoPhillips, right?
oh, yes, we are on
Yeah.
Apache.
Sorry. Yes.
You're
Just
absolutely right.
just confirming. Okay.
You're absolutely right. Apache. And if you look at the current one, oh, here it is. See, it's gone up lately.
Yeah, you know what's amazing is that
Yeah.
I hear so many people say, oh, all of this is moving because of our geopolitical situation. And isn't it funny that we've got all of these seasonal patterns that take 98 years data and we're looking at the same types of motion. It's truly incredible. I mean, it
Yeah.
truly is incredible. It's incredible.
Yeah, it's amazing that you can actually see the historical patterns and the narrative and the geopolitical news somehow align with it. If it wasn't current geopolitical news, it would have been something else that they would have.
Exactly.
I mean,
Exactly.
what was it 4 years ago? It was all about COVID, and
Yes.
that's what was
Hmm.
causing issues, um,
Yeah.
or different reasons for downs. Or it's amazing that how reliable some of these patterns are. And
Yeah.
on midterm election years, they seem to be very consistent. And by the way, you can also um, compare it to consecutive years. So if I just select consecutive here and the 10 years is here, this is based on last 10 consecutive years. See, the years are 1 year apart now.
Hmm.
And now you see a lot more losses.
Yeah.
But P
Interesting.
plus two, it's all winners.
Interesting.
I, I don't even know what this company does.
Apache, yes, they're an energy group and they do a lot of natural gas. Apache is a very big,
Amazing,
yeah.
because energy seems to be one of the few sectors that actually does well in summers of midterm election year.
Yeah, that's
Now,
very interesting.
technology does not do well on summers of midterm election year. Surprisingly, it's
Yeah, you wonder.
yeah, we can switch to NASDAQ and take a look at some of those.
Oh,
Look at
okay.
that light material. See?
Oh,
See the
yeah.
downtrend?
Mm-hmm.
If I switch to consecutive years, look at what happens. It's on an uptrend.
Yeah, interesting. Very
Apple,
interesting.
P plus 2 years, it peaks
Mm-hmm.
here and then it goes through a
Falls
downtrend.
over. Yeah.
How about consecutive? It's on an uptrend.
Interesting.
Technology doesn't do it. The one that's most, I don't know if I've shown you this one. This one is truly amazing to me. If I look at the last 6 P plus 2 years and look at the world's most valuable company, look at this. This is Nvidia based on the last 6 midterm election years.
Wow.
I look at the last 10 years or last 6 consecutive years, look, it's on an uptrend.
Wow.
If I look at the last 10, it's on an uptrend.
Interesting.
But if I switch to PE plus 2, which we only have 6 years because Nvidia is a fairly new
New
company,
company. Yeah. Yep.
look at it. It's on a downtrend.
Wow.
Nvidia has
Look
historically
at that.
done badly in summers of midterm election year.
Interesting.
Look, 45% in 2002.
Wow.
And we're not even looking at it till the end.
Mm-hmm.
It gets worse. It peaks around here and it
Where's
just,
it begin to flatten? What month is that? July?
it is actually 22nd of March, at beginning
22nd
of
of March,
spring.
and then to the end of July. Okay.
Yeah, it's on a
Interesting.
downtrend. And look, in 2002, it dropped 77%. In 2022, it dropped 46% and then closed down 30% during this window.
Wow.
Nvidia, and I've shown
Yeah.
this to people that say, well, Nvidia wasn't an AI company. They were an AI company in 2022.
Yeah.
They definitely were.
That's very interesting.
But this is the most valuable company in the world that nobody believes has a down cycle. I have a hard time believing it. I'm just looking at
Yeah.
data. I mean, how in the world can Nvidia do badly? I don't know. But
Yeah.
the data shows that it has done it 6 years in a row. Even
Wow.
here, it dropped 13% and then closed up
Slightly.
1%.
Mm-hmm. Pretty amazing.
And it's across the board. Just, I mean, look at this.
Right. So,
AMD.
so if I had my favorite company to look at, then if I came in here, all I would really have to do is put the ticker in at the top on the right-hand side where the bar chart is, right? So I would just plug
Yeah,
in
you can
whatever,
just
plug
put
in
it
my
in,
favorite, and then I could
put
see
your
the
start
best
date.
waves
Yeah, all you have to do is type the start date you
start
want.
date. Okay. Which could be
Let's say
today or whatever.
BA. Well, today is the 10th, so I'm just
10th.
gonna make
Mm-hmm.
it 10. And then it was on 210 days because of the last thing we looked at. But just look in here. You can
Mm-hmm.
decide where to move this.
Yeah.
And
Yeah.
and then look up here. You can see the start date
Mm-hmm.
and the end date is calculated with the number of days here. So
Okay.
this
I
one's full.
noticed the best waves tab disappeared here.
Oh,
Is
that
it?
actually is probably an issue that needs to be solved because if I selected it here,
Ah,
it should come unless, let's find out. Oh, BA doesn't come up here right now. Yeah, the best waves for Boeing should have come unless there isn't a best wave the uh, for that date range. That date
okay.
range, if the Sharpe ratio is below 1%,
Ah,
so,
gotcha. That makes good sense.
so that may not have been a
Yeah.
good date for Boeing.
Okay.
But
Very good.
here's another amazing
Yeah.
one is it's which just incredible to me. Here's another
Wow.
mega cap, Caterpillar,
Mm-hmm.
has a midterm election year meltdown.
Wow. Wow. Plus, they had such a big write-up just here lately with all of the data center builds, I'm sure, a
Right.
lot of people are going to walk back on those data center commitments because of CapEx spend. So that's interesting.
Yeah.
That is fascinating.
Yeah, they
Every,
do
every
not do
day,
well.
yeah, every day is something super interesting in here. It's really the
Mhm.
reason that I go to first thing in the morning. It's just a great way to see what things are looking like for sure.
Right. And by the way, you don't have to do all these trial and error to find the best things. The analytics engine finds them and just
Mm-hmm.
sticks it on the left. So those are the
Yeah.
best that exist based on Sharpe ratio. So
Mm-hmm.
anytime you can go to May, let's say May, and last 10, let's call P plus 2 years. Nothing came up.
Interesting.
That's because of the date range.
Ah,
They
gotcha.
had day range of 10-60, so nothing came up for that.
Oh, you got to hold it through the cycle. Look at that. Look at
Right.
all the days. You got to, if you started in
Every
May,
day
you'd have to hold it through the
belongs.
cycle.
Right. You have to.
Wow. All right.
But like Merck doesn't do badly. It's like a um, defensive strategy that people have put their
Mm-hmm.
monies out of technology into healthcare and
Mm-hmm.
drug companies. So there's no down like we saw.
Interesting.
Neither is Amgen,
But
Procter and Gamble.
these are all safe stocks, right? They're
Exactly.
all, yeah, except
So
for
if people are
Nike.
getting
That's
out of
it.
Nvidia, they're going in
Yes.
here.
Yeah. Very interesting.
Walmart, they don't have that down cycles that we saw.
Right.
And then they have this big one coming up, which is
That's
the, I named this pattern, a 100-year pattern, starting September 27th of midterm election year for around 295, 300 days. It's the most bullish time in
interesting.
the last 100 years.
It's going to be
Do you want to see
fascinating.
it?
Sure.
If I go to S&P 500 index, I've selected P plus 2 midterm election years,
Mhm.
and we have 24 midterm election years starting from 1930.
Wow.
So I am going to select 27th of September, and I'm going to go and select 300 days, maybe. Look at this.
Wow.
1930, in the middle of Great Depression,
Mm-hmm.
this date range of 9/27 until July 23rd was a loser. It has never lost again.
Interesting.
This is
Wow.
the most bullish time I have ever found in the last 100 years. And I'm telling you, companies must know this. The big trading firms,
Mm-hmm.
because they're the ones that are buying.
Yep.
They're not telling anybody that this is the time. And look at when it starts. It starts after the worst summer of the
Mm-hmm.
presidential election year when people are scared to jump in. But
Yep.
it's the most bullish time there is.
Can't wait.
I call it the 100-year pattern, and I wrote a book about it called The 100-Year Pattern.
That you can get on Amazon.
Right. You can't just look for
Yep.
100 or just type 100yearpattern.com and it goes to a page that you can click on and go to Amazon and get it. But this is the basis of it. There are just so many different things you can do, but if you want to learn this, you really don't have to go far. You can just click on the little chatbot and ask it questions. The AI will help guide you.
Yeah,
I
that's
don't use it
fantastic.
because I know it, but AI will guide you. And also, you have full help. Everything is explained here.
Yeah, you just have to dig in and give it a little time, like all very robust tools. They require a little bit of effort to dig in to see all the stuff that's done. This was amazing. Thank you for taking the time with
Oh,
me
thank you.
to show it off. It's a fantastic product. I can't wait to see it everywhere.
Thanks. I'm hoping, I mean, this is the kind of work that institutions do.
Yeah,
They research, they do deep
absolutely.
research. And this is, with this tool, they can do even deeper research.
Yeah, absolutely.
This was great, Anne-Marie. Thank you.
Yeah, my pleasure. It was great. I love getting to sit with you and go through the platform because literally every time I'm in there with you, you click something else and I go, oh, I didn't even know that was there. So it's always good. It's always good.
Yeah, thanks.
Good.